So there's going to be a couple different types of mortgage insurance. The one a lot of people are going to be familiar with is going to be the one that actually protects the bank or lender, whichever you would prefer to call them. That's going to be our PMI. That's the additional money that you pay basically to reassure that loan. If let's say you're borrowing 90% or 95% of the money needed to purchase the house, that's what it's going to be, mortgage insurance. All that mortgage insurance that you're paying monthly for does is basically insure the house, insure the lender of the house. It does nothing for you at all besides cost you money, obviously. So that's what that mortgage insurance is. Typically, when we at the agency are going to talk about mortgage insurance is how do we, if something were to happen to you, how do we plan on paying off that mortgage for your family, your spouse, your kids, whoever it may be, but mortgage insurance in that retrospect. And typically when we're talking about that type of mortgage insurance, it's some sort of life insurance for you. So if something happened, how would we pay off that mortgage? Or if we can't necessarily budget in the entire mortgage, how do we make multiple years of house payments? That way your family can stay behind you. So if you're the breadwinner of the family, or you just make, even if you're not the breadwinner, but important income to the family, let's say, for example, you owe $300,000 on the house. How do we plan on A, keeping our family there, or B, paying off that mortgage if we happen to pass early? So how are we going to accomplish to get to the $300,000? Or let's say we can't do $300,000 because it's not in the budget. Let's say, can we do $50,000 so we can make multiple years of payments in order to pay that balance down on the home, and your family can continue to live there? It's really hard. I mean, when you look at this, I see it all the time where people don't have any life insurance at all. Somebody passes, and then there's no money left to pay anything off. So not only do they have to go through the loss of losing a loved one, but now they have to go through the loss of actually moving as well. If you're somebody with young kids, that can be traumatic upon itself, just moving, let alone losing a loved one to boot. So something to definitely keep in mind when you get a mortgage is how are we going to be able to keep in that house? It happens a lot. I mean, it's obviously if you have two incomes, most of the time we don't base a home purchase off of just one income, right? So, somebody makes $5,000 a month, somebody makes $4,000 a month. Well, we're not probably looking for a $1,500 house payment unless we get really fortunate to be able to do that. We might be looking at that $2,500 home payment range. And when you get into that, typically you can't survive off of one income when that happens. So how are we going to be able to subsidize that, or actually maybe even pay off the mortgage if something did happen to you? I know most people don't think about it when they're late 20s, early 30s, or, we have people buying homes these days as early as 20. We don't think about that type of thing. When you are younger, it is a lot less expensive in order to purchase as well. So it's definitely something you should take a look at. So that's basically the two types of mortgage insurance. There's two types. There's one that's for the lender and there's one that's for you. Obviously, myself, I'm concerned about the one that's for you and your family. Where the lender is only concerned about themselves if you don't have enough equity in the house for basically them to bust out of. Because a lender a lot of times is going to take maybe a little bit less money than we would on the personal side if we were selling our home. So they want to make sure that they're protected. Therefore, that's why you see that charge. And typically till you get to about where you have 20% equity in the home, where the bank's going to feel comfortable, where they can at least break out of that home if something did happen.